Back with the market, right here on ET Now. CS Info Systems, that's the one in focus. Let's try and decode their Q4 numbers. They're targeting doubling their revenues by FY25. Let's try and figure out how they exactly plan to do this. We have with us Rajiv Kaul, the Executive Vice Chairman, Whole-Time Director and CEO of CMS Info, joining into the show right now. Rajiv, hi, good morning. Good to have you on the show. Rajiv, while on the top line, your revenues have grown about 8% this quarter. Managed service segment revenue degrew 6%. What were the reasons, and what is the outlook then for both these segments going forward?
So, good morning. When we ended FY21, we had set ourselves a goal, as you mentioned, of doubling our revenue from roughly 1,300 crores in the next 4 years. FY22 has been a fairly intensive year. You think of COVID wave 2, you think of Omicron. We listed the company successfully, and yet we have grown this year at a revenue growth of almost 22%. Which is a fantastic year for us. I'm very grateful to our 22,000 team members who deliver fantastic quality service every day to banks and its consumers. Coming down to specifically your question on the revenue, our revenue for Q4 has grown overall at an 8%. We have two businesses. A larger business, which is around providing logistics services around the whole currency ecosystem for banks, which is 70% of our revenue. And then we have a managed services business, which is providing technology solutions to banks around the currency value chain. It's a newer business. It had a fantastic quarter last year, which was driven by a lot of one-time product revenue, which we have streamlined into more services revenue this year. So even though you see a 6% dip, but that business overall has grown almost 35% year on year, 34% year on year. So both business segments are growing very well. Our cash business has grown about 21%. Our managed services business has grown about 33%.
Okay. One of the reasons, Rajiv, of the strong performance also was, I guess, market share gains. Where is it currently, and how much more market share do you intend to gain by FY23 end?
So we are the largest company in the sector on the cash management side, but we are an emerging player on the managed services side. When we look at the overall markets landscape, we see the growth opportunity for us comes from organic volume growth. Market share shift because the sector is getting consolidated steadily over the last couple of years and in the future years. And then realization, activity levels, pricing. So all of this leads to the revenue growth numbers we have seen witnessed for last year. We are in the cash management space broadly at about a 46% market share. And we have our goal is to hit 50% market share in the next 2 years.
2 years. I'm going to ask you a little bit more about projections, especially when it comes to financials, because I believe you intend to double the revenue to about 2,500 to 2,700 crores by FY25. Now that we're already 1 year into the time frame, or FY22, walk us through the outlook in terms of the target. Do you think that it could be achieved even sooner?
So, we can't predict the entire cycle. I think when we started FY22, we didn't know we would have a tougher year than we anticipated. We've made very good progress. We are ahead of our internal aspirations because our execution on the ground, we had a large order book. At the end of H1, FY22, we had an order book of almost 2,000 crores, which has now grown to about 2,200 crores. We have executed roughly 70% of this order book is already live. And I think that gives us a very good base to try and target to the growth numbers we talked about. We will aspire to achieve these numbers, by FY25, and if they happen earlier, it'll be fantastic.
And, given the fact that unlike the global markets in cash management, the Indian CMS market can also see a consolidation, much like rather what we've witnessed across the globe. So are there any plans of gaining market share via organic or inorganic routes anytime soon?
So some of the developed countries obviously have seen the sector move to a 2-player or a 3-player market because you need the density and you need the technology to drive and to operate this business at scale. India is still a good growth market, and therefore it does attract companies who want to enter the space. As you see in this year, currency in circulation for the economy has grown at a 10% rate. For CMS, the currency we have handled has grown at 22%. We almost handled 11 lakh crores of currency in the last fiscal. March was a peak. March is when we hit almost 1 lakh crore of currency handled. Organic market share gain is something we hope to deliver through just improving our quality and deepening our network. We are already present in 98% of India's districts. We cover 15,000 pin codes. We have our teams operating on almost 4,000 routes. And as banks try to deepen their presence, we will be the first partner of choice for them to be able to take their services to the remotest part of the country. Inorganically, we have been what I would say is very focused on sensible, logical acquisitions. We don't look at acquisitions for driving growth, but only from a perspective of saying, does it add to our capability? Does it improve our return metrics and returns to our shareholders? So if we find any acquisition targets in our ecosystem which tick the boxes, we will definitely look at it.
The cash management industry is also estimated to see about a 15 to 17% CAGR growth. But with the kind of risks emerging now from rapid digitization of retail transactions, do you foresee this as a possible hindrance to your growth story by any chance?
So, we have seen digital adoption in the country rapidly grow since demonetization and even during COVID. But despite that, if you look at the broader statistics on currency volumes in the country and the currency usage of the country, I think it is also growing. Our belief is very straightforward. There are multiple versions of India. There is the upper middle class, there's the middle class, and there is the mass market. And we see usage of currency still very robust. In fact, when you look at things like e-commerce, almost 65 to 75% of transactions are still cash on delivery. Having said that, we have also invested and incubated new business lines. Last year was a fantastic year on the revenues and profits, but we also created a new business around artificial intelligence-driven remote monitoring solutions at ATM sites, which is already now running live at 10,000 sites. By the end of this year, FY23, we aim to double that to 20,000. So that's a new lever of growth. CMS Info Systems is maybe a 12-year-old company, but we have had and adapted very rapidly as the markets have changed. We were a IT maintenance company in 2009. We became a cash management company by 2015, and the biggest. Today, we do banking logistics services as well as technology solutions. As the market evolves and as we see opportunity, we aim to work with banks. We aim to be a partner of choice. We aim to give them services which will be highest quality and give them a geographical coverage which no other company can.
Okay, great to then chat with you and get in clarity on where the business is headed, Rajiv. Good speaking with you.
Thank you so much.